Thank you, Simon Morrison. He's an investment analyst at Milton Optimal. Well, shares in the electronics manufacturer and distributor Ellies fell 5% to an intraday 52-week low of R6.17 at the beginning of the week. They're down again this morning to below R6 a share, and pulling out the numbers in the last 3 months, they're 27% lower. The chief executive, Wayne Samson, is with us in studio. Not least, Wayne, because the last time we spoke, I was actually, when you left here, I was all excited about Ellies, and I almost went out and bought some shares in your company. To a degree, I'm glad I didn't, because the share price just seems to be going in one direction. What's going on?
I actually don't know. We're very upset and very concerned. If I may be blunt, I think a lot of it's been to do with a certain amount of media hype, which has been really misconstrued and everything out there. I mean, I won't even say what sources, but I hear on radio and on tweets that directors are continuously selling shares on trying to go out. What do they know that the market doesn't know? In the last 3 months, there's been one director's dealings of 200,000 shares, which constitutes 0.001% of the director's holdings in Ellies. So how this constitutes this bailout, I don't actually understand. I'm at a loss for words. You know, I went now back to the share trade since we came into open period at the end of July, and we're still at a net 200,000 shares sold. So, and you've heard it in the press. Where does this hype come from? How does it get reported so falsely? And I think that's what stirred a bit of panic in the market.
So there might be a short seller out there that's infiltrating the news channels.
Yeah, listen, that's what I believe. I think as Ellies, we've taken a policy over many years to be open and honest with our investors. At our results presentation in July, I did turn around to all the investors and say, listen, the first 6 months would be a hard act to follow after the first 6 months last year. The first 6 months of our 2012, we came out with a 102% increase in profits, which is a hard thing to beat, but that we're on the right track, and as Ellies, we're still confident on growth for the year.
Maybe we could just talk a little about the OpenView TV, because you were very bullish about that last time you were in studio. It's a few weeks further down. Do you have more clarity for us?
Well, it launched last week, so it's still very early into it. Listen, I don't think the likes of MultiChoice and everyone else are going to lie down. It's going to be a bun fight, but you know, the way I see it, there are two different markets. You've got your higher LSM, your subscriber market, and you've got a free-to-air market. If you look at the statistics, I think there's around about 11 million TV viewing households. I think MultiChoice has around about 3 million, which means you've got 8 million households that are watching free-to-view. With the digital migration coming through, they've now got an option of going DTT or going on the OVHD bouquet, which is there. It's a once-off purchase and there's no subscription thereafter. So it's an option there, and I really believe it will get traction in the long run.
But you should win both ways, because if MultiChoice fights with OpenView and reduces their prices still further, that means more satellite installations for you, presumably.
100%, but I don't even think there's an issue of reducing prices. I think OVHD is going out between 1,700 and 1,900 Rand retail in the market. So I don't even think
that's for the installation.
For the installation part.
But I mean, for the if DSTV brought down their bouquets to say 10 Rand, surely that would open.
They've already got a 20 Rand for the lowest bouquet, so it is there. It's just another option. I believe, as I've said to you in the past, I think in the next year, the whole TV viewing environment in the country is going to be changing dramatically. There's going to be more players. Only 2 weeks ago, Centec announced they want to go with their new OpenView package. So there's a lot of more players coming into the market. We saw yesterday, even though there's a court interdict, Top TV is looking at relaunching. So the whole environment's going to change. And as the largest supplier and installation facilitator in the country, would like to believe that we're a part of it. So at least for the future, we're still very bullish. That's why I'm saying we're very concerned about what's actually happening. The fundamentals of the company really haven't changed. It's nothing that I haven't gone out and told the public about, and I'm not hiding anything from the public. I mean, I had some interesting emails from a UK company saying, is there a pending court case we don't know about? There isn't any of that. So there's been so much speculation put out there. So I thought that's why it's good to come in here and just kind of call the speculation.
Indeed. The 30 million that you held back by not paying a dividend this year, was that, with hindsight, a smart decision? Because often when you don't pay a dividend, people do see things that couldn't be there.
I wouldn't say it's smart or not smart. I think you've got to follow JSE regulation. In the JSE regulation, when you're going to issue a dividend, you've got to go and put through your cash forecast, etc. We've invested a fair amount into the OVHD, so where we've invested that money in the OVHD, you can't then take borrowings to pay out a dividend. So it's just following what the JSE protocol is and what the allowance is. It's silly for us as a company to try and make an application at the JSE knowing that there's a chance of a rejection coming back. We'd rather have invested into stock. If I'm not mistaken, our return on assets is around about 30%, return on investment 30%. So if I can go to our shareholders and say, let me take this money, invest it into a project, and if I can give you 30% back, that's worth more than the few cents in dividend policy.
Are you likely to pay a dividend, though, in your next reporting period?
We always look at paying, we're very scared to put a dividend policy out as such because the company's been on such a growth. I mean, if you have a look, in 2007, I think before we listed, we turned over 576 million to 2 billion rand in a 5-year period. So with that kind of growth, we're not sure what the future investment is. Once we've got a steady growth path going through and it's more consistent 15, 20% all the way through, and yes, we can put a firm dividend policy in. As shareholders, as directors own 45% of the company, believe me, we'd also like to see a dividend coming through. But we're trying to be prudent and do what's in the best interest of the company and the shareholders.
It's just an interesting phase that we're going through with the market at the moment. You'll pay a 20 PE, for instance, for an SAB Miller, which is growing at 5%. But you know that 5% is solid. And dividends sometimes come into the calculation of investors in that kind of environment. But when looking at your share price, you're down to under 2 billion rand in market cap now. So it's been quite a hit that you've taken there. What strategy do you employ when you're under this kind of attack?
Purely, the only thing that you can really do, honestly, is to come onto a show like Power Lunch and give an honest answer. We can't manipulate share price. We can't trade up and down. At the end of the day, our share price is what the shareholders are doing, buying and selling. The only thing we can do is put honest information out there for them to make their decisions on. If I was an investor, I'd definitely be buying in Ellies. I think it's the cheapest we'll see it in a long time.
But what about your chairman, Elliot Selko, the founder? He was the one who sparked it all when he sold those shares. Should he not just, he's got the money, come back in and buy another 200,000 and put you into a net position?
Well, the sense should be out now. You should see some dealings with directors because we find it very cheap. Mm-hmm. But with Ellies CEO as well, I mean, you saw some trades in the past there with Berrywood. I mean, just to put it in perspective, Berrywood was a B consortium that came in at listing. They were defaulting, so those shares were going to be dumped on the market. He took them up so it doesn't get dumped on the market. He's just trying to recoup what he put in to stop the dumping in the market. So, that's the story of that. But the part that's very difficult as a listed company, it's something we're learning, I don't think we'll ever come to grips with it, is that directors of companies are human beings as well. They've got bonds, they've got expenses, they've got everything else. I don't think it's reasonable for a director to be told to hold forever and a day, with the growth of the company. That I'd also like to realize some wealth or profit going through. I think you would be concerned if a director went and dumped 50% or 60 or more percent of his shares, but that's not what the case is.
Especially if you're not paying dividends. That's one of the theories that Warren Buffett was talking about at the AGM this year. Rather than pay dividends, he suggests that people who need their income sell a small percentage of their shares every year, and in that way, because the share price will continue going higher, they actually have a better after-tax return.
Sure.
Wayne, do you have any idea on who is selling shares to push the price down?
It's been across the board. I think the biggest panic I'm seeing, because I get a day-to-day, week-by-week trade, we've got a lot of private investors, that are on the internet buying and trading, and from what I can see, the vast majority of trades in the market are the smaller investors through. And they're the ones that are most influenced by media report and hype, etc. And I do see one or two institutions buying up what's going cheap, which is a clever move to do.
So the mug money is selling and the smart money is buying?
I'd like to believe so, and I'd like to sit here in front of you and tell you that Ellies is still confident. We're still bullish for the future and the future of the country over the next 5 years.
Thank you to Wayne Samson. He's the Chief Executive of Ellies. And after the break, we'll discuss the future of fracking in South Africa in the light of regulations that were promulgated last week. Don't go away.
Brought to you by Altec. Leading technologies, touching lives.